everyone. I hope you are doing well at the Fashion Law Africa Summit today. My name is Victoria, and I am a lawyer here in Chicago. I really hate that I am missing you guys in person today, but I'm here on video. As I mentioned, I am a lawyer, and I am also founder and managing partner of Enrichment. It is a private investment deal sourcing firm, and what we do is exactly that. We find investment opportunities for our clients and help them to ensure that the opportunities are the right fit for their investment objectives. I am also the chief editor of one of the original fashion law blogs from a few years back, the Baffled blog, thebaffledblog.com. I wish I was still writing on it as much as I was in the past, but there's 10 years of good content still on there, so feel free to check it out. Lots of tips and tricks and things that will not go out of style. So hope you enjoy that. And I'm also the founder of Joy and Magic Curated Teas. So if you're a tea drinker, check us out. Today, I am going to be talking to you guys about investing in the fashion industry. So I'm sure there are many of you there that have fashion businesses, whether that is specifically apparel, or maybe it could be shoes, could be accessories, or maybe it's kind of in the beauty and wellness space. So I'm hoping that the different tips and information that I will share today will be helpful in all aspects. And I am surely very happy to connect after if you have any questions. So feel free to reach out to me. One of the first things that I'm going to talk about is the key financial metrics and different indicators that investors would be looking for as they are considering investing in fashion brands. So one of the main things is your runway. And the runway is the amount of money that you have that gets you from today to the day that you have $0. So your runway is comprised of all of the spending that you do in conjunction with the revenue that you receive and the burn rate of that cash over the course of from day to day, week to week, month to month, quarterly, and annually. So it's really important you know how much money you have currently and how long that will last you, because when you start doing different fundraising rounds, you will need to know how much you need to raise to get you to the next time that you'll have to raise money. So knowing your runway is really important. That also gives you a very good outlook of how you're spending your money. So what are your staffing needs costing you? How much are your raw materials? What are you spending on other services? So certainly you should have a lawyer, maybe not necessarily on retainer, but somebody you can call at least, on a project basis, or retainer. That's great if that's where you are. But you also would want to have an accountant. And you may need some other professional services as well. So those costs are really important to consider when knowing your runway. And it is also important to know your cost for customer acquisition and everything else that makes up your balance sheet. And so that is very, very important. And that's something that investors will really be looking into as they consider whether or not it's a good idea for them to invest in your fashion business. It is also important that you really understand your profit margins. That is so, so important. Your profit margins will help to determine your revenue projections, which also will help to determine your runway. Of course, things always come up. We experienced a pandemic no one was expecting, so there are always things that you cannot plan for, but there are many things that you can plan for. So you want to be sure that in understanding your profit margins, that helps you with the full outlook, again, of your balance sheet and other financial circumstances. You want to also be sure that you understand the profitability trends within your industry and your specific sector. So general fashion profitability trends are one thing, but you need to know specifically what that is like in women's wear, what that is like in men's wear, children's clothing, or whatever specific sector or segment your brand is a part of. And the reason that is important is because, again, anything can happen and you have no idea how your specific sector may play into the larger economic picture. So, knowing what the trends are and how things are happening currently, how they got from where they were in the prior economic trend is really, really important and critical. Another thing I would suggest is to be very strategic about your go to market strategy. A lot of times the big plan is to be in a big box store or to be in a major retailer or in the mass market somehow, which is great, but there are so many other ways that you can explore growing your brand. It could be direct to customer. It could also be being in specialty markets or specialty stores. So be sure that you are exploring those options and not seeing just the limited focus of major retailers and big box, because you have options. And actually delving into uncharted territories is where you can make pretty good changes and impact and definitely disruption. So that is critically important to really explore and see what the best fit is for your go-to-market strategy. One other thing I would add in, which is not specifically financial but has an impact on your financials, it is also very important to investors, and that is where you are in the regulatory landscape. So let's say you have a brand that is chemical based or ingredient based. And I say that to say, maybe it's makeup or skincare, beauty in some sort of way. You want to make sure that you are fully compliant with all regulatory standards. If there's any specific testing that you need to do or testing disclosures that you should do, you want to make sure that you are compliant there. These are things that go into your valuations that, again, are not specifically financial metrics, but are critically important. You want to also make sure that you are in a good place as far as sustainability. That is an increasing priority for investors these days. So if you have a product or a certain apparel design that is heavily based on a lot of use of water or a lot of electricity, you want to see if there are ways that you can work to make them more efficient. So that it's not such a heavy impact on our planet, because that is something that is, a major concern, and you don't want that to compromise your valuation. Another thing is your intellectual property, which I'll talk a little bit more about later, but you want to be sure that you know whether you need a copyright, trademarks, or even patents. And all three of those comprise intellectual property that you may or may not be using. I would assume you would be using trademarks because you have a logo, I'm sure, or at least a brand name, and you want to make sure that that's protected in the marketplace. So that is very, very essential. And you may have a device or some useful item or ornament that should be protected by patent. So if that is the case, you want to make sure that all of the registrations are in place, and that you are using other protections that are not federally registered, but can be used until you are ready for ready and granted a federal registration. So intellectual property is important. And the last thing I would say is your team. Your investors are going to want to know, in addition to you, who else is working to make this company grow? Who else is working to help take this business to the next level? So it will be important that you have the right people around you, whether it's in-house people or consultants and other professional service advisors. That also could mean, your relationships with manufacturers. Are the factories not sweatshops? Are they in a position where they are treating their people right, even though those people don't work directly for you? You want to be sure that you don't have any of these problems that could arise and really take an investment off track. So I hope those tips are helpful for you as far as what you want to be mindful of when courting investors and the things that they will be definitely very concerned about. Some of the common challenges that fashion startups have when they are seeking investment can include anything from not heavily considering equity financing or not diving in on grants the way you really could. So that's kind of two different areas of being able to get financing. And so I'll dive in first on grants. Grants are great ways to get financing for your business. It is really important that you learn as much as you can about that grant. A lot of times they have frequently asked questions on their websites, and they have tips and tricks that can help you know the best ways for you to be able to submit the best grant application. It is really important that you give them what they want. So if you have kind of canned answers, that's great, but you want to make sure the answers translate exactly to what they want to hear. It could also be useful if they offer webinars or other opportunities to share insight on what a good grant application looks like. And if you have anyone in your network who has any grant writing experience, it would definitely be a good idea to connect with them as well. The one thing about grants is that a lot of times the entities that are giving the grants away are giving them away regularly. So you may not be able to build a strong and long-term relationship with the grant making entity. And that's okay, because you still need that funding to move your business forward. Where equity financing comes in is getting money and funding to move your business forward, but that comes usually at greater amounts, which is a good thing, and also comes directly from either maybe a venture capital firm or personal investors directly. So they will invest right into your fund right into your business without investing in a venture capital fund first. If that is the case, the really good part about that, contrary to a grant, is that you have the opportunity to create a long-term relationship. And that is really helpful to your business, because money without knowledge is not actually as helpful as it may seem. You do need money to keep your business going and to grow it in many different ways, but it is really important that you also have the people and the network around you to move your business forward. So a lot of times with equity financing, although what that specifically means is that people are buying into a piece of your business. So if it's on the venture capital side, they are buying into a minority share of your business. You're still the majority owner. It is your business, but they have a piece. Maybe they have 10% or 5 or 15, 20, something like that, but they have ownership in your business. It's not bad. It helps you move your business forward, and it gives you, hopefully, their expertise and aspects of their network, because since they are now investors, they will care about the growth of your company. So that's a great thing, certainly assuming that they've done their homework on you and you've done your homework on them. So I would definitely say that missing out on exploring equity financing is really something that could present a challenge, because without that consideration, it could be hard to take a business to the next level without having an equity stake with someone who is not only, like I said, bringing funding, but bringing expertise and a network as well. So I would highly suggest considering both grant funding and equity funding as well. A few things that fashion entrepreneurs should keep in mind when determining valuations and negotiating terms. Terminology. Terminology is very important. While you are exploring these options, you will certainly need to engage lawyers, at least one, but you'll also potentially be talking to, whether it's venture capitalists or investment advisors, investment bankers, people in the private investment industry, and you want to make sure you know what they're talking about. That doesn't mean that you have to be the full-on expert in the private capital space. You're the expert on your company, which is number one priority. But you should understand the words that they are using. You should be able to ask questions that are related to moving your investments forward. And when they ask you questions, there shouldn't be crickets chirping because you don't understand the terms. So one of the things I would highly, highly suggest is reading the book Venture Deals, because it really gives a wonderful helpful understanding on the terminology that is used in the private capital space. Yes, venture capital, but also in the private equity space, which is a majority stake takeover. Um, and also just in the like I said, in the private investment space in general, you really want to know what a term sheet is. You want to know what a cap table is. I'll tell you, a cap table is an overall outlook of the equity ownership of your company. So your cap table will say this person owns that percent at this amount because that's what they invested. This person owns this amount at such and such percent because that's what they invested. And it's critical to determine your valuation. But you need to know those things. And there are a few other baseline terms that I think are really important to know. But reading venture deals and just having even just a baseline understanding of the terminology that is used in the private capital space is very important. You want to make sure it is something that you're clear on. And even so that you can talk to your professional consultants in the best way too. And maybe they can be very helpful in getting you to understand what the different terms are. Have a session with them, take them for coffee or dinner or something, and tell them, like, tell me everything you know so that I can make sure I understand all of these words and terms as I am looking to court investors for my business. And I'm sure they'd be happy to do that. There's a wealth of information out there. So there are a lot of ways that you can get up to speed to make sure that, just as much as you need to know to be sure that your transaction and investments go smoothly. So, like I said, I can't stress that enough. I would also say to be very well studied on the current landscape of your specific product's market. Knowing the ins and outs of the industry and the current market landscape is really, really important because you will be asked about how your business plays in the big picture of the economy. And so you'll want to know what's going on in the fashion industry within your sector at all times. And so whether that's reading news a lot, industry news, and economic news in general, focused on retail, focused on textiles and other ancillary industries that your industry is dependent on, is really important. And just as much as you want to stay up to date on the local news is what's happening outside your window, you want to stay up to date on the day to day of your industry as well. So I would definitely say that is really important. And in doing both of those things, with knowing the terminology of the investment space and staying up on market trends, they should help you have a long-term vision for your company. That is very important because investors will want to know, if I'm helping you today, where do you see us being in 5 years, in 10 years? And I mean, of course, no one can make any promises, but to know that you're thinking about it and you are consistently keeping that plan up to date based on the landscape of the economy and otherwise will be really important too. So you definitely want to have a long-term editable strategy. Um, Fashion entrepreneurs can definitely take a few approaches to identify potential investors. And I would definitely say that one of those ways is to be very engaged in the fashion industry. Of course, you want to engage with your peers, you want to gain information from them, and you want to share information with them. Sure, there's a little bit of competition from brand to brand in the same sectors, but information is nothing if you're not sharing it. It's also nothing if you're not receiving it. So you want to be sure that you are able to engage as much as possible. Like I said, reading news, but also attending events and really making connections with people and entities that can be helpful to grow your brand and also your knowledge in general. You always want to be as smart as you can be on your business and the greater scope of the industry. So that's important. It is also important to be engaged in capital intensive circles. And what I would call capital intensive circles is areas and events and also communities where people who are involved in the funding industry are available to you. So if there are venture capital or private equity or private investing, wealth management organizations or events that you can go to in your area, that's a great way to do it. Now there are so many opportunities to engage online. There are often a lot of webinars that talk about the investment space, and you can get in, you can meet people in the chat, you can connect on LinkedIn. There are so many ways that you can connect with people who are a part of the investment space. And what you may find is that people in the investment space or in the professional services space in general, because remember I talked about lawyers and I talked about accountants and other professionals that you may need, they may work in the investment space generally, but they might have an interest in fashion, an interest in beauty. And when you are able to connect with them, that brings you into their investment space, but it also can bring them into your fashion, beauty, wellness space. So relationships are everything. I could never stress enough the importance of relationships. So that is very important. Another thing I would suggest is being open to SPVs, special purpose vehicles. And those are entities that are created for a number of investors to invest in your business together. So instead of one person writing a check saying, here's my check for whatever amount, it may be 3 or 4 people who will invest together for a larger amount. And this is really helpful from the perspective of being able to diversify your cap table in many different ways, because you'll be able to have investors who might not be ready for a 6 or 7 figure check, but they can write a 5-figure check, maybe even a 4-figure check, depending on what you're looking for. But they can bring a certain level of expertise, and maybe they are in a certain a certain ethnicity or a certain demographic that, again, may, for whatever reason, may not be able to economically bring you a larger check. But if they go in with other people and are, forming an investment group, then they can bring you both money and knowledge, which again, can't stress enough how important the two of those are together, because you definitely want substance with your finances. So considering SPVs, I think, is also a good idea as you are approaching investors and trying to find people who would be interested in your business. If you're open to an SPV, that could really open up really more options for you. I'd like to also give you a couple of examples of some successful brands that have been able to effectively attract investors for acquisition of their businesses. Now, I know a lot of times people are not necessarily ready to think about selling their business because it's your baby, right? You created this from a dream you had or a nurturing of an amazing talent that you have. And why would you want to give it up, right? Well, to build wealth is one reason, but also to be able to go on to the next dream, because you have built that wealth and now you are an expert and you can bring money and expertise to someone else's business. So that is a reason why you would definitely want to think about an exit strategy, but also because investors are going to ask you that. They will want to know in 5 to 10 years or so where you see this business being, and an exit strategy should definitely be one of those things. And that is something that Carol's daughter was able to do. That is something that Miele Organics was able to do, and also Bevel, created by Tristan Walker. So it is important to think about those options. All of those founders remain very close to those brands. They are ensuring that the brand loyalty remains, and they were able to bring over a very strong customer base, which made their businesses attractive to the companies that acquired them. That is important. You want to build your customer base and make sure people have an affinity for you and know that your product, whether it's attire or skincare or anything like that, make sure that it's something that they know they can trust. They can trust the ingredients. They can trust that, all the products are going to do what they say they're going to do. The clothes aren't going to make them itch, and they want to know that you are the expert on the business. So that is the actual item itself. That you know how the stitching is done. You know that the zippers should be a certain way. And you also know, again, those numbers. You understand the profit margins. You understand your company from a full 360 view. That is critical. And that is something that Carol's daughter and Miel and Bevel were able to do and make themselves very attractive for acquisition. Following their acquisitions, as I mentioned, they still remain very close to their brands, and they've also been able to become investors themselves. They now have a new level of wealth that allows them a lot more flexibility to do things within the private investment space and within their specific industries that they had not been able to do before. So I definitely urge you to think about that option and to be definitely considerate of ways that you can take your business to the next level through an acquisition. Maybe the acquisition is with one of your competitors, or another business that is ancillary to yours to help build their brand portfolio. Or maybe it's the opposite. Maybe it is for you to be the person who makes an acquisition. So again, that's why you want to know the terminology and have a great network of people around you, because if you are going to acquire a major business that is a competitor or an ancillary business to yours, you want to be as aware and as astute as possible. And you also want to know what to look for in an attractive, what we would call target company to acquire. So definitely urge you to, like I say, be the expert not only on your business, but in your industry and sector as well. That you can never go wrong with that. I also want to give you a few key components that I think would be really helpful as you are putting together your presentations for courting investors. You want to make them excited about your brand. You love this brand and you want to make them love it too. I don't think it needs to be too gimmicky or anything like that, but you definitely want to show passion about the business that you have built, and you want to show that you are also well studied, not only on your business but on the economy around your business. That part is important because you need to know how you play, your business plays into the big picture. So if you are engaging and excited and well studied about your business, you are already off to a good start, because that will show them like, oh, I can trust that person. And I know that they are dedicated to having a full understanding of where things are with the business from day to day, quarterly, etc., to make sure that there are returns produced, for them and for them as an investor, and certainly for you. So it is really important to have as much knowledge as you can, and also engage your friends, engage your family, have them, be testers for you in doing your investment pitches. They can ask questions and give you guidance and feedback so they can help you be really prepared for what would come up when you are doing a presentation before investors. So utilize all the folks in your network that you can. It'll really be really helpful. A couple things I would also share as far as pitch decks. You really want to make sure that you are precise, clear, and that you are hitting the highlights. I would definitely suggest when you come into meetings to ask the folks you're meeting with how they want to spend the time. Of course, these people can read. They may want to read the pitch deck later, so you don't specifically have to take them through slide by slide. But if you are able to give them, a very good, clear overview of your business, talk about the revenue projections, give them insight as to how they can be helpful and why they would be an asset to you. Talk about your background and who your team is, and how they can reach you. If you hit those main highlights and then let them ask you questions, you are already off to a good start. There are some folks who like to do the 10-20-30 rule. It's 10 slides, 20-point font, and the deck takes 30 minutes to go through. That's a good option. There are also quite a few different pitch deck templates that are very much worth researching, because you want to be sure that your pitch deck is fitting to the people. Like I mentioned with the grants, you want to give the audience what they want to receive. So I would definitely suggest finding pitch decks that are specific to your industry. A lot of folks in the fashion industry obviously want to see what your product looks like. So while you don't want to create a catalog, you'd want to show pictures. You may want to show where your production is done. You want to give examples of how a product goes from start to finish. So that it would also be really important. If you have garments, it would be nice to bring them so they can see them, touch them, feel them. That part is important too. And even products, so that they can see what they all look like. Very, very important. And as I mentioned too, you want to make sure that your regulatory requirements are up to the full standards, like I said, at the local, state, and federal level, if any. And you want to make sure that your team is intact. You should definitely note the people who are working directly with you within your pitch deck. And of course, you want to make sure that your intellectual property is intact as well. And at whatever point that may be, you want to be conscious of registering for a trademark or using the little TM superscript if it is not yet time for you to make the registration. If you have certain ornaments or a device that may require a patent, you should be able to tell them where that is in the process of you working with a patent lawyer and getting those patents registered. Do your patents need to be registered outside the United States? That's important too. So these are things that are not 100% essential to put in your pitch deck, but could come up in a pitch meeting. So you really want to be sure that you have a very clear understanding of all aspects of your business. There could be things, and there will be things that they will ask you and you will not know. But if you know enough, they won't worry about the things you don't know, but they will feel confident that you will be able to get back to them. So I really hope that all of these tips have been incredibly helpful to you. I wanted to be sure that you have even just a little bit more of an understanding of private investing if you already knew about it. I wanted to give you some reminders if there were things that you were kind of aware of. And I certainly wanted to be able to enlighten you if you were like, private what? So hopefully everything in this session has been really helpful. Again, I was not able to be there with you all in person, but I look forward to connecting, and I wish you all the very, very best in your businesses. Have a wonderful day.